So our next presenter today is Leah Wallace. She is the Director of Investor Relations at Christina. Christina Development Corporation, known as Christina, is a vertically integrated real estate sponsor and manager founded in 1977 and headquartered in Malibu, California. For over 40 years, Christina has sponsored direct real estate investments in the West Side region of Los Angeles, which includes Beverly Hills, Brentwood, Century City, Malibu, Santa Monica, Westwood, West Hollywood, Venice, and Silicon Beach. They are executing a proprietary and proven strategy focused on tax advantage wealth preservation and long-term capital preservation and appreciation. Actually, I want to welcome Vincent Chan, who's filling in for Leah Wallace, who had the technical difficulties, and appreciate it last minute for Vincent Chan, the CFO of Christina, to join us and be able to give the presentation here today. Thank you so much. And floor is yours, Vince.
All right. Well, thank you, Tim. My name is Vincent Chan, and I'm the CFO of Christina. I'm joined today by Adam Rosenkrantz as well. He's our Director of Asset Management. So we are excited to share the Christina story, our investment strategy, and this limited opportunity with you guys. So let me do this share screen. All right. So anyways, let's see here. Whoops. Is it working?
Yes, fine.
Okay, so Christina's real estate investment strategy has been tried and tested for over 4 decades through multiple recessions without a single investment loss. Our strategy is very simple and repeatable. We buy underperforming assets in great locations at a discount alongside an experienced fiduciary, and we enjoy the long-term tax benefits and capital appreciation. Christina is a vertically integrated real estate sponsor and manager. And what that means is we do our own acquisitions, our own development, our own property management, and we secure the financing. We were founded in 1977 and headquartered in Malibu, California. And for more than 40 years, Christina has sponsored direct real estate investments in the West Side region of Los Angeles. And that includes Beverly Hills, Brentwood, Century City, Malibu, Westwood, Santa Monica, Westwood, West Hollywood, and Venice, Silicon Beach. When you invest with Christina, you invest with Larry's 40-plus years of experience in one geographic market, again, through multiple recessions without a single investment loss. Larry is an outlier. He's a very creative and independent thinker. He's a self-made real estate entrepreneur with grit. This is what attracted me to Christina. I previously worked at American Homes for Rent, Public Storage, and PS Business Parks. No other real estate has Larry at its helm. This is what makes us truly unique and special. Larry is a great mentor and an inspiration to all of us here at Christina. He has invested heavily in each one of us, and he pushes us to our limits because he is so passionate. Let's see, screen here. Location, location, location. This is our sandbox. We live, breathe, and sleep in our marketplace. This is what we know. This is all we know. We are not trying to be all things to all people. We believe that every investor's portfolio should include real estate. We also believe that every real estate portfolio should include the West Side region of Los Angeles. Christina provides our investors access to this highly desirable marketplace where people want to live, work, and play. The West Side region of Los Angeles continues to attract and fulfill positions in a broad range of creative fields, including entertainment, technology, design, fashion, publishing, education, tourism, health, and science. The West Side region of Los Angeles has excellent year-round weather, and we will be hosting the 2022 Super Bowl, college football's 2023 National Championship game, the 2026 FIFA World Cup, and the 2028 Summer Olympic Games. So with that, I want to turn the presentation over to Adam Rosenkrantz. He's our Director of Asset Management, to go over how we buy properties and how we source them.
Thank you, Vincent. Good afternoon, everybody. My name is Adam Rosenkrantz, and I'm very pleased to share a little bit about the Christina story and our deal sourcing capabilities, which we believe to be one of our core competitive advantages against our peers. We believe that deals are both found and made. Our deal sourcing network has been cultivated over our 43-year history operating in the West Side region of Los Angeles. And we believe that the only time to buy great real estate is if there's a compelling event-driven situation that is forcing somebody to sell, where we can acquire a property at less than perceived to be market value. These event-driven liquidity events often occur from death, divorce, bankruptcy, partnership disputes, essentially any opportunity for us to acquire a property from somebody who needs to buy. And this has been allowed, we've been able to realize this through our niche focus. We don't operate in Texas, we don't operate in New York, we know our marketplace, and as Vince mentioned, we stay true to our existing sandbox. Everyone has heard of value add, but how many of you have heard of value bought? Value bought comes from being in the money day one. When you acquire a price that's below what perceived fair market value is, you've already enhanced the value and you've already made yourself and your investors money day one. On this screen here, we have the 6 existing real estate investments currently owned by Christina Real Estate Investors IV, and in addition to the 1 property that is currently under contract. Each of these acquisitions represents Christina's embodiment of value bought due to event-driven scenarios. The 4 Hayworth properties were acquired from the family of the original developer and had never been traded since their construction in the mid-1950s and early 1960s. Interestingly enough, Larry actually himself had the sellers at his bar mitzvah when he was 13 years old in Los Angeles. So to show you how small of a world it is and how deep and wide our extensive relationships are, this transaction epitomizes that. Our Pacific property is a beachfront idyllic property in the burgeoning Playa del Rey community, which is in the heart of Silicon Beach. This rare acquisition only became available for the first time in over 60 years since it had been constructed. It has panoramic beachfront views from almost every single unit, and it's a true epitome of West Side real estate. Larrabee is a preeminent property in the West Side region of Los Angeles in the ultra-exclusive West Hollywood submarket. West Hollywood has been a entertainment mecca for many years, and properties north of Sunset Boulevard are both highly desirable, highly sought after, and extremely difficult to entitle. This is a ground-up development where luxury condominium units will be constructed and sold to end users. The final property is in the 3rd Street Shopping District area of West Los Angeles. This property is perhaps our most interesting and compelling opportunity for acquisition, as it has never been traded since its construction in 1928. The relationship with the estate attorney, whom Larry has had a pre-existing relationship with from a prior transaction in a different Christina Real Estate Investors portfolio, had enabled us to acquire this property with really very little competition due to the strong network and relationship that we have cultivated. This is a property that has dual frontage on 3rd and Orlando, and it's right across the street from one of the most prominent hotels in Los Angeles. And obviously, the hospitality market has been challenging at the moment, but we believe that the community, and once it's been revitalized and people are back, will only underscore the desirability of this property. Christina believes deeply in taxes, and we are very focused on taxes, and it's really not how much you make, but how much you keep. The Christina IV Real Estate Investors portfolio is expected to generate significant passive tax losses this year due to bonus depreciation of newly acquired properties. These passive losses can be used to offset passive gains from other investment and minimize your taxes. This slide is a great example of how we minimize taxes within the managed portfolio. Let's say we own 3 properties. Property 1 was recently acquired and will generate significant passive losses due to bonus depreciation in year 1. Property 2 is stabilized, but still generates passive losses due to depreciation. If and when we decide to sell Property 3, you will not only pay lower taxes due to capital gain, long-term capital gain treatment, but we'll also be able to offset most of these capital gains within the managed portfolio from the passive losses generated from Property 1 and Property 2. Christina has had a long-standing and enduring investment strategy that has propelled our growth for over 40 years, and we believe that this opportunity is a preeminent real estate investing opportunity with a sponsor with a demonstrated track record, unique opportunities to capitalize on dislocation in the market, and we truly believe that there's been no greater time for real estate investment in the West Side region of Los Angeles. After that, I think we can turn it over to question and answer.
Thank you so much. If you could stop sharing your screen, please. Great presentation and a great demonstration of a team. How about that? We actually had a technical difficulty from our original presenter who emailed me last minute to say power and Wi-Fi went out, called on 2 other team members to come in, step in, and give a presentation. So if you're looking for a team that can execute, obviously you have one here, because in a matter of minutes, they managed to execute and they're all in succinct. So that's very good job. Very great presentation, considering everything you guys had to go through.
I was actually next door. We're renovating our office building. I'm over there with our contractor and I get called in and it's like, well, this is what we do. This is what we love.
Yep. You just have to do it. Put the fires out and where they come. The first question here. So a reminder too, if you have a question and you want to type that question and type it into the Q&A at the bottom of your app, and we will read your question out loud, and those will be answered audibly. So our very first question here comes from an anonymous attendee, and their question is, what are your historical IRRs?
Vince, you'd like to take that one?
Yeah, hi, that's a great question. You know, we are very, very cautious. Sorry, we're playing switcheroo here, hot seat here. No, we're very conservative with our internal rate of returns. You know, real estate is an investment that not only appreciates in value, but you get significant tax benefits along the way, such as deducting depreciation from your building. And those returns are never calculated in an IRR, but historically, we've averaged over 20% net IRR to our investors. And so it's a pretty significant return. We believe it's very low risk because of the marketplace. Again, Larry is a genius and he's been doing this for a long time. So there's definitely a conservative element to Larry. I think because of where we operate, you know, it's quality assets. It's like buying a bond. You know, it's not going to default. You know, the West Side real estate market is always in demand. You know, we have our ups and downs like every other market, especially during pandemics. But at the end of the day, if you look at the historical real estate prices in our market, it's always been on an up curve. And you can't replace some of these locations. You know, they're not making any more land. So it's just a matter of where you want to live. And, you know, we have the greatest weather, great amenities. And like I said, there's not one property that we've sold in the past that we can never buy back at that sales price. So I think the track record speaks for itself. You know, again, you get good returns, capital appreciation, and you also get the deductions that come along with owning great real estate. So, like I said, better you get a T-bill, get like 1% money, or you can invest with Christina and get double-digit returns. And the nice thing is that you actually own a tangible asset, and that's something, you know, speaks for itself. You know, you can drive by and go, that building, I own a partial ownership of that building, and so it's pretty satisfying. So we're investors ourselves. You know, the management team invests at least 5% in every deal, so we're definitely in it with you guys and are aligned with you guys.
Excellent, thank you. We have another question too that actually speaks to that geographic region that you're focusing on. Well, if you could answer, what makes West LA more appealing than other geographic areas, or maybe how it compares?
All right, let's do the switcheroo. Adam?
You got it. You know, I think what's kind of been the core benefit of the West Side region of LA is really constant supply and demand imbalance, where there's been an undersupply in relation to the desired space, and that's really been, what's driven the consistent rent growth and kept occupancy rates very high as well. Those have been things that have historically very much, been the cornerstone of the West Side region's success, but also you have the best year-round climate, right? At the end of the day, people are looking for desirability of their life and the quality of life as well, and I think those things have underscored it. It's also been an economic hub of activity, and especially with the influx of jobs coming into Silicon Beach, that's been something that's really, revitalized that community as well. So I think, there's been a lot of conjecture about a net migration away from the West Side region, but wait until people who are, on the East Coast and they're freezing their tushes off, they're going to want to come back to the West Side region, and we feel very strong about the underlying demand fundamentals here in the long term and presently.
Excellent, Adam. And I think this question will probably be for you too as well. Does Christina focus on one specific type of property?
We do not. So we are product agnostic, right? We believe that so long as we're operating within the West Side region of Los Angeles, which is really our core competency and our area of focus, we want to be able to capitalize on any attractive buying opportunities that may arise. And what we think is, although you're not going to have diversification within location, we can do diversification within the managed portfolio by product type. We own, multifamily apartments, multifamily condominiums, office space, retail space. So I think that has given us a great degree of diversification. When there's a good deal and there's money to be made, you don't want to limit yourself to one asset class. We've owned, operated every product type over the 40-year history of this company, and we feel very, very comfortable in maximizing value of any real property, just so long as we can buy it in the right price and the right location. Excellent.
Our next question, I'm thinking you guys might have to do a switcheroo, but or possibly maybe you might be able to have handle this one, Adam, too. And honestly, you may not want to handle this question. This is a question about taxes. This is a question about do you have to actually own other real estate to benefit from the tax shelter strategy?
Sure. Vince?
This is pretty fun. It's like a hot seat again, musical chairs. That's a great question. One of the things about real estate is that, again, it generates significant passive losses. So I think Adam showed an example earlier, but when we buy a property, we allocate the purchase price to land and building. Building we can depreciate. And what that really means that every year you'll get a K1 from our company with an allocation of passive losses. Now those passive losses can be used to offset other passive income that you get from other passive investments on K1. So if you have other outside investments like oil investment, you have passive income, you can use our K1s to offset that. But I think what's even great about our structure is that even within the portfolio, as Adam explained earlier, we can offset gains and losses within the portfolio from different properties. So it's one of those things that if you're not really focused on that, you can really, that's the extra added value. Real estate's a great asset alone by itself, but when you take the tax benefits, it's one of the greatest gifts from the government. And I think it's even better now is that because of the Jobs Act, we're able to market this opportunity to everyone in 50 states where we couldn't do that before. So I think this investment opportunity and what Tim is doing for you guys right now is you guys have a lot of investment decisions to make. And, it's great that we can do this with the Jobs Act where we can present in all 50 states now. This opportunity was never allowed outside the country club membership before that. So it's really exciting to see where things are headed.
Excellent. I'm even looking at the chat and just comments even here just about the great teamwork that you're doing right now. This is just demonstrating the teamwork and just the ability to just answer these questions, hand them off. None of these are pre-prepared or any of that. So we have a question here from an anonymous attendee. Will there be any returns to investors prior to a sale?
Yeah, it's another great question. A lot of real estate investments, you make money off capital appreciation and cash flow. One of our strategies, because we're on the West Side, real estate is a lot more expensive because of where it's located. So we're not a big fan of cash flow. We're more a big fan of capital appreciation and tax benefits. But what's amazing, say we buy a property that's been undermanaged for many, many years, we go in there, we improve it, we increase net operating income, and what we'll do most likely, we have the opportunity to sell it or we can refinance it. So when you refinance it, it's great because you can monetize the fair value of that asset, and we'll get some cash out, and we'll actually distribute to our investors, before we sell it. And what's great about that is because it's not a sale, it doesn't trigger a capital gain tax. It's a return of your investment. So it's basically you get money back from us, and it shows up in your K-1 as a distribution, but you don't pay taxes on it. And that's the magical thing about real estate. You can defer paying taxes as long as you have more investment in your portfolio. So that's a big way a lot of people make money nowadays is, it's not how much you make, it's how much you keep. So again, a sizable distribution from a refinancing is one of the best ways to get cash out of a property deal and not pay taxes on it immediately. So that's a great question, and that's what we try to focus on is how do we return your capital back as soon as possible and not have to pay taxes on it.
Very, very good answer. And this next question really speaks to what is the offer right now? What is Christina's offering right now that you're offering to potential investors?
Yeah, so Christina 4 is still open for investment. We're going to close it shortly. But the nice thing about it is that you're buying into an existing portfolio of 6 assets that Adam described earlier. Typically when we launch an offering, we don't have any assets in our portfolio. So you guys have the hindsight where you can see what we actually own, and you can own a piece of it. And we still have room to buy another 1 or 2 assets in the portfolio at these pandemic prices. So we're very excited about offering this to you guys today, so we can buy a few more properties in the portfolio and close this fund out. But as you know already, you already have a preview into what we actually own, and those 6 properties are amazing. I mean, I know one of them is about a mile from where I live on the beach, literally on the sand. I mean, that's one of those irreplaceable locations that never goes up for market. So the fact that we got this rare opportunity to own it, is such a gem, and that's something that we pride ourselves on. It's really how we buy assets and where we buy them.
I'm coming to visit, bringing the pina coladas. It's on the beach.
Right. Great.
What's the minimum investment then?
Our minimum investment is $100,000. Real estate's not cheap on the west side, so our minimum has always been larger than most offerings. But if you're interested, we have a ChristinaLA.com is our website. We have a data room that you can look at and see some of our track records, some of our materials, some of our marketing stuff, offering documents. We're very excited about what we have in the pipeline right now. Like I said, certain asset sectors have been out of favor, like retail, office, and even hospitality. So we have a couple deals that we're looking at that we're very excited about. So that's why we're eager to share this opportunity to the world. And, we want to close this fund next month. So, there's a little bit limited time available, limited space available. But now's the time, I don't think real estate will be at these prices for much longer. So it's all about timing. I think people made a lot of money in the stock market. I think it's a little frothy right now. It's time to roll over some of that money and to buy into long-term real estate. So it's a good inflation hedge as well.
Excellent. Now, I know you've presented a couple of times here. Christina's presented a couple of times before here. Is there anywhere else we can hear? You're presenting in any other events? Is there any more we can learn about?
Yeah. No, definitely. Because of the pandemic, we started to learn how to do Zoom webinars finally. I think, Tim, you've been ahead of us, but we're starting to adopt that. But next week, actually, Larry will be speaking at this Lido conference. If you go to our website, you can ask for more information about it. And then the following week, we're going to be doing an actual text webinar with Larry and a managing director of CBiz to go over kind of the tax incentives of owning real estate. So, and then the following week, I think we have another webinar that we'll be going over kind of LA, real estate trends, opportunities, and how people can have access to this marketplace now. And these will all be Larry Taylor. Unfortunately, couldn't join our call today, but he's the visionary behind Christina, and he's a very informative and educational speaker. And again, I'm learning something from him every day still. He's got so many stories and so much great deep experiences that he's exciting to watch. So yeah, come to our website and ask for more information. But we got like 3 back-to-back webinars that we're going to be having. So again, we're excited to share ourselves with the rest of the world here. So thank you, Tim, for hosting this. It's always a pleasure to speak at these events.
Excellent. And for the audience, Vincent Chan and I, we go back to together. We work together at American Homes for Rent. So we actually have known each other for quite some time. I appreciate you coming out and presenting here today. Give us the website. If you put that in the chat, give us the website, give the audience the website so they'll know where to reach Christina and where they can find out about all these events. Thank you so much.